The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 31st wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential. Because living up to our potential, that's something that we must master each and every day. So let's go begin with several empowering beliefs. The first one brought to us by none other than Abraham Lincoln. And it goes like this. It says, it's not the years in your life that count, it's the life in your years. Think about that one. That is a beautiful thought. How about Henry Ford? He said, when everything seems to be going against you, remember that the airplane takes off against the wind, not with it. Now, how's that for a beautiful thing when you run into some obstacles out there? And the last quote brought to us by Farrah Gray says, build your own dreams or someone else will hire you to build theirs. That is a beautiful thought. That's a beautiful way to live as well as leave. Look, folks, success leaves clues, and that's why I want you to understand patterns. I want you to understand candlestick charting, and that's why I want you to understand how to be able to read the message of the market. So let's go read the message of the markets right now. We've got the Dow up 46 points, traveling out at 15,566. S&P up 4.5, traveling at 1690. NASDAQ up 16 points at 3632. Russell up 3.5 at 1047. NASDAQ up 12 points at 3097. New York Stock Exchange, up 20 points. And net decline in issues of minus 47. What does that say about the breadth of the marketplace? Well, I can tell you 10:08, it doesn't say anything positive about the breadth of the market out there. To be up 19 points and the net decline in issues to be down 51. Now, here's the key. The key number today is going to be 1055. You put that number down. If there are net advancing issues of more than 1055, it will mean that the Bears have fumbled the ball and that the Bulls have picked it back up. But short of that, it says the Bears are in control of the market. They were yesterday. They took control of the market the day before, and they've got control of the market as we speak right now. We've got gold trading back $11 here at 13.12. Silver off 10 pennies at 19.55. Light sweet crude up 21 cents. You got King Dollar. It's on the move. It's up 32 ticks, trading at 82.24. Our call-in number is 877-927-6648. If you give me a call, we can take a look at your stock chart. Happy to answer whatever question, maybe about a technical pattern or something that you have a question about out there. Be happy to do that. Let's start off taking a look at the S&P 500, traveling at a rate of speed, or price at least, at 1690.33. That's over the 1687.18 May 22nd high. It has been hanging out here for, a couple of weeks. We'll see. Maybe today Uncle Ben is going to jostle it loose one way or the other out here, and that's going to happen sometime between 2:15-ish or so, maybe by about a quarter to 3 o'clock. We'll see how the market actually reacts to any of that news. Maybe no reaction at all, and it just goes back to what we already know, which is the Bears have control of the ball at the moment. Let's switch over and take a look at the SPYs. We got the SPY that is trading out at 169.06. 169.07 is the May 22nd high out there. Again, not a whole lot of activity out here. You did have that bearish engulfing that had formed here several trading sessions ago, right back here on July 23rd. 169.83 becomes your level of resistance inside the SPYs out there. Let's take a look at the Qs. The Qs here have been the I'll call it the wild card, because they are at they're above the May 22nd high, 74.95 out there. They are now above the July 17th high, which was 75.74, traveling out at 75.87. They tested that area yesterday. It was 24 million shares, and yesterday's volume was 24. So it had the similar volume going against that level. So far today in trading, 5.1 million shares. The wild card out here, because 77.22 is its next pattern completion, which is your 1-to-1 A to B equals CD, and that is coming off of the lows here in April 18th, 66.88, and then your B point, that's your A. Your A point was May 22nd. Your C point, of course, being June 24th, the low 69.15. So 1-to-1 says 77.22, and taking on that swing point from July 17th with similar volume certainly was not a failure, and sets up a move potentially to 77.22. It's at 75.84 out there as we speak. So it's one that we'll take a look at. Now, inside the cues here, as I switch over, leading the charge to the upside is Symantec, Garmin, Comcast, Fiserv, Micron Technology, Altera, Catamaran Corp. On the NDX 100, I don't see Apple in there or Google. To the downside, you've got Amgen, Dell, Autodesk, SBA, something or other, Alexion Pharmaceuticals, F5, Expedia, Activision, Yahoo, Rand Gold Resources. So those are some of the stocks here that are pulling the NDX 100 to the downside. Inside the S&P 500, to the upside here, leading the charge this morning is going to be Symantec, OneOK, O-N-E-O-K. I don't really know how you pronounce that, but I'm pretty sure OneOK is not it, but that is how Stevie's son is going with it. You got Garmin, that's putting some oomph into the S&P, Comcast, Fiserv, Micron, Fluor, MasterCard, Air Products, ADT, and Omnicom, TripAdvisors as well. To the downside, pulling away from the S&P 500, Mosaic, MOS is a ticker symbol, down about 2.5%, 6% actually, from the close. Genworth Financial, that's off $3 and percentage 3 down. I'm sorry, it's down 41 cents. That's down 3%. Amgen, American Tower, Dell, Autodesk, EQ, Resident, Exelon, U.S. Steel, down 2% here this morning, off 36 cents. To the upside here in the Dow Jones, leading the charge to the upside in the Dow Jones, Merck, Hewlett-Packard, Bank of America, United Health, Walt Disney, and 3M. To the downside, McDonald's, Verizon, Intel, Alcoa, Coca-Cola, AT&T, and Walmart. Again, our call number, 877-927-6648. Let's continue on here and take a look at the other ETF structures. Let's take a look at the Dow Diamonds. 155.14, that is the May 22nd high. It's traveling out at 155.38. Rejected. The 155.14 yesterday was 4.2 million shares, going into 12.7. So far in trading today, it's done 2.5 million shares. Got some decent volume as we speak today. I suspect that'll peter out until we get into Uncle Ben time frame out here. Let's take a look at the Russell 2000, the real king inside the ETFs, inside the indexes. That has been the strength out here. Not really doing a whole lot. It is trading out at 103.95. It's got resistance out at the 105-ish area. We'll call it 10. We'll just call it 105. How about that? At 105, it's got resistance. Volume so far, 4.3 million shares in trading today. Let's go over into the actual indexes as well. We'll take a look at the numbers there. We looked at the S&P 500 earlier. Let's take a look at the Russell 2000 as we speak here. Russell 2000. Again, not doing a whole lot. The resistance area is 1056.86 inside the Russell. That's your 1-to-1. A to B equals CD. If there's a bust out, it'll send the Russell up to about the 1082 mark out there. That'll complete a 1 to 1.272. And as I pull this back, it'll also get into the top of a rising price channel out here. That would be the next level to the upside inside the Russell. To the downside, it's going to be the May 22nd high out at 1008.23 out here. Let's take a look at the NDX. Again, similar to what we were taking a look at here inside the Qs. The number here in the NDX 100 that you'd be looking at as it is now traveling above its swing point from July 17th out here. The actual 1-to-1 will take it at 31-47. It's trading at 30.97 out there, so about another 50-point potential to the upside. We'll see. That's so if the market does break out today, if they like what Uncle Ben has to say, then 31.47 is in the cards here for the NDX 100. But right now, the Bears actually, even though the Dow's up 55 points, no big deal out there. The Bears have control of the market. You've got net declining issues of 40 inside the NYSE. So be careful. Could be a real trap out there, a little bull trap. If we take a look at the New York Stock Exchange, you're not going to see much movement out here. New York Stock Exchange traveling at 95.81 out there. Now, the New York Stock Exchange has not been able to test that May 22nd high. That is 96.95 in the market. What else can we look at? Let's go take a look at the SOX here. We know that the SOX broke a hammer candle, came back yesterday, and they broke that hammer candle on July 29th out here. And now all that it's doing just a normal retracement here. Broke that hammer candle. It looks to me like it really wants to form an A to B equals CD down. Now, it's hit the dead cat bounce area, which is 478.32. It's trading at 478.04 right now. That's coming in off of the high of July 17th all the way down to the low of July 29th. If it can take out 478.32, 484.01 would be the normal area where it would go ahead and travel to. Let's go take a look at what's going on with Goldilocks out here. Right now we've got gold trading off about $10. Let's see if there's any volume behind this move. Now what gold is doing here, what it has done this morning, remember gold is, if you're watching this on Tiger TV, it's been traveling in this downward price channel. It's been really traveling inside this price channel ever since September of 2012. So nearly, about 10 months out there? 11 months, almost 11 months, it has been traveling in a downward price channel. What gold did do is it broke that price channel on July 23rd out there. And now all it's been doing here since July 23rd, as it's pulled back, it's been testing. Of course, it's also got some resistance. We knew that it would have some overhead resistance at the April 16th swing point. That was where it had volume of 700,000 contracts. And we know coming up into this has been much lighter than that. So it's really hitting some resistance. The real question, in my opinion, is more where is the pullback going to be inside gold here? So, and really, it's a possibility that this is all that we're really seeing out here. Now, a normal pullback would say 1244. That would be coming off of the swing point low from June 28th all the way to the high that is in on July 23rd out here. So I think the importance is paying attention to what the euro-U.S. dollar currency pair is doing. Well, U.S. dollar index as well. What I've got on my screen here right now happens to be the black squiggly line is the euro U.S. dollar currency pair. Use that from a directional standpoint to help you understand what gold is doing. Now, the euro, the king may be getting stronger here, and the key is, which it is, of course, right now it's only up 19 pennies, but the key is if the U.S. dollar index is going to take off, just how is gold going to pull back out here? So we got to pay attention. Now, areas of possible, if you're looking to scale in on gold, 1284 would be one spot, and 1244 would be the other spot that I would be taking a look at. But you're going to need to monitor it and may need to make some changes in that. If we go take a look at high-ho silver out here, not a lot of change in silver, down 6 pennies. No big deal out here. Silver being weaker than gold. Of course, silver now has been traveling with inside this bar here from July 22nd. Low of that bar is 1949. It's traveling out at 1962 right now. A close above $20.57. That will be a momentum move to the upside. And where will it take us? Well, where? $22 or so. 877-927-6648. We'll be right back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 55, S&P's up 5. Not a lot of changes here. And let's go peek in on Light Sweet Crude. That's the continuous contract that I've got up on my screen. I've got a bad volume spike in here, so let me get rid of that on the bottom of the chart here. There we go. So we're not paying attention to that. Now, as we take a look at the continuous contract out here, we'll start with the A to B equals CD that it completed. That would take you back into the June 28th area, 77.28. That's your A point. Your B point on Light Sweet Crude is the top of the candle from September 14th, 100.42. Makes a retracement, looks like probably about a 0.618 retracement, down into the November 7th time frame, 84.05. That's up your C point. The 1-to-1, A to B equals CD, 107.43 out here. What Light Sweet Crude actually hit a couple of weeks ago was 109.32. Now, that's one pattern. That pattern completed. There's another pattern out here, and that's that 14-point sideways consolidation. So light sweet crude has been in a consolidation range for the last year out here. Once it broke through that area, which it has not tested, but once it broke through that area, that set up a $114 price tag at a minimum. When you break a consolidation, your minimum move is going to be equal to or greater than the consolidation. So what we know is that pattern has not completed. What we also know is as the 1-to-1 A to B equals CD was completing, we can see that light sweet crude had gotten into the overbought territory. You utilize that relative strength indicator. You know, it's interesting. I had the television on in the background, and the sound was off last night, and I saw what's his name, Kramer, out there, and he was talking about the relative strength index. I was like, how about that? In any event, I digress. I mean, truly digress out there. So I had to turn up the sound to see what it was that he was talking about out there. In any event here, what we know is when you get up into that overbought range that it's got to be worked off, and it's going to be worked off. Price has to be worked off, that is, either by moving sideways or pulling back. In this case here, what we have seen is the dead cat bounce so far, the 0.382 retracement coming off of the low, the swing, the most current recent swing point low, which would be June 24th out there at 92.67. So for it to move back to 102.96, that's been normal. That's a normal move out there. Now, light sweet crude will get bullish, and it will go complete that move, or should complete that move to 114 if it can close above the open from yesterday. So what you want to be paying attention to is the 102.67. We'll call it, actually, let's do this. Let's call it the bar from here, so let's call it the high of the bar. The actual number, 104.54. If light sweet crude closes above 104.54, that means 104.55 or above. Light sweet crude will likely not only get back up to 109.32, but it will probably complete its move to 114 out there. Now, if it doesn't get back above that bar, then that says that, okay, it'll probably come back, and this is what I would prefer, quite frankly, that it comes back and it tests the $99, that it tests the top of that consolidation. But if we do take a look at the potential A to B equals CD, shorter term A to B equals CD. Assume that, in fact, this is all of the pulling back that it does. The 1-to-1 A to B equals CD takes you to 119.25 out here. Now, if it does the 0.618 retracement, so we can draw this in advance out here. Again, we're going to use that June 24th, but let's assume it comes down and it tests the actual top of that consolidation and it holds, which means it doesn't get back inside and rejects that area. Your 1-to-1 A to B equals CD. Guess where that takes us to? 115.64. So that is more likely the pattern. All that we're seeing here right now is we're seeing the overbought situation being worked off inside the marketplace, inside light sweet crude. So it's great because we know what the trade parameters are, and all we have to do is sit back and let the market, let it tell us what it wants to do and try to set up that next trade out there. So that was on light sweet crude, taking a look at the daily continuous contract here. If we take a look at bonds here, bonds now moving lower. So you've got bonds moving lower. They're going to go try to tackle that July 5th area, which is 132.04 out here. I don't see a whole lot of bullishness here. Maybe volume-wise, even volume-wise, that swing point, this is a continuous contract, but it looks like 222,000 contracts. It's pulling back today with 191,000 contracts, pulling back with way too much volume out here. Now, maybe it's going really against this 427. Looks like that's really the swing point low, 132.02 from July 8th. So to a certain extent, it's pulling back with light volume out here. But, being unable to get above the body, let alone the wick out here of the July 5th candle, that's bearish, not bullish, at least in my book out here, for whatever my book is worth to you. If we take a look here at natural gas right now is just sitting at the 1 to 1.618. A to B equals CD down. That is at the 342 level. That's your 0.786 Gartley buy, but no bulls rushing in on natural gas. Looks like it wants to make a 100% move of a move. How about this? We got the Dow is up 90 points right now. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 90 points, traveling at 15,611. We're going to travel out to Fort Madison, Iowa, to our man, Ken. Ken, thanks for calling. Thanks for holding. How are you this morning?
I'm very good. Thanks for taking my call.
My pleasure.
I'd like to have you take a look at INTC, Intel.
Yes, tell me what you're doing, how I can help you out.
I own it. I've owned it for a while. I bought it a little under 20.
Okay. And a long-term trade, is that what you're, tell me what your outcome is here, what you're looking for.
Somewhat, but I'm getting a little antsy about how it's acting.
Okay, all right. So, let's take a look at it for you on a couple of different time frames. The first thing we'll start with is the shorter term or the daily chart maybe time frame, and what Intel did coming off of the highs back here from May 2nd of 2012, it has formed a 0.618 Gartley cell pattern. And it did that here, Ken, on the give me a moment here. I want to pull up another screen. Give me a moment here to do that. I just situating. Okay, so it did that right back here on June the 4th. And on June the 4th, it also created a little shooting star candle out here. And that's at the price level of $25.98. So it's got some real resistance right now up at the $25.98 level. Now, once it formed that Gartley cell pattern, what it did after it created that shooting star, it actually gapped down a little bit with some volume, 53 million shares. And it gaps down, and then price gets up to test that shooting star. It tests it with 36 million shares versus that swing point, that shooting star, which had 68 million shares from June 4th. So it didn't have enough volume, clearly, to bust it up. Then it continues to move down. Now, from the bullish side, the area that you want to be focused on and be paying attention to is going to be the low of July 10th. And that low is 2264. So on the daily chart, that's your area of support. That is a hammer candle out there, and that hammer candle was most certainly confirmed when price moved down on July 23rd and July 24th. 2263 was the number it got to, but it was 33 million shares and 28 million shares going against that hammer low of 50 million. So that's a bullish side. The bearish side on this, additional bearish side, now it did create a bullish engulfing candle as well on July 25th. The problem here with the equity is that it hasn't been able to get above this little resistance area that was created by the most recent gap down on July 18th. And that high is $23.61 out there. So that's the next area of resistance. It's at $23.41 right now. Also, you've got the area of 2404, which is July 17th. So it's got a zone here of where the bulls are trying to defend their position, and that's going to be that hammer candle from July 10th at 2264. And the bears are defending their position up at about the $26 range, $25.98. So that's the range that you're in. You're in at $20 or so. If the hammer candle fails, price ought to move down to $21.81, which is your 0.618 retracement. If that area fails, then 2067 would likely be its next move, and that would take you down to the 0.786. So that's on the daily chart that is out here. You also have some friends here, maybe some bullish friends from the January 17th candle, 100 million shares, and that seems to be what's really holding this equity in place here as that hammer candle were formed. So I'd also, keep your eye on that January 17th level. So that's on the daily chart out here. Let's go take a look at a weekly chart for Intel and see if we can find any type of bullish candles out here or bearish candles inside Intel. And as we take a look at it on the bullish side, you've got also a hammer candle. So that makes this last week's candle out here, 2263, makes that a very strong area of support. And if it closes below that on the weekly chart, Ken, what that is suggesting to you and to me is that price would travel down to its next swing point, which will take you into the April 5th area around $20.75. So where there's nice support on this happens to be the bottom of a kind of a consolidation area, bottom of a set of swing points that has held, which is around 1916. So you would, if in fact the hammer candle gets broken, 1916 as an area is not out of the question. You'd have to make a determination whether or not that's, you would want to stay in the equity. Should in fact that occur in the marketplace. So that's what the weekly is saying to us. On the monthly chart, I don't know if there's anything else different on the monthly chart, but let's go take a look at it. So on the monthly chart here, what we can see, it's traveling at 2342 right now. And as far as bullish candles, really nothing that's really out here. No single bullish candle, just your swing point low of 1923. So, does that help you, or what question would you have having that information?
That helps me tremendously. I'm going to watch it very closely, and I may sell some of that.
Yeah, it would be a nice buy at about $19.16 if it's coming down there, with the right volume. It seems like that area has held, and so that would be your next potential buy point on this on a weekly chart. I want to see if it's got a price channel here that it's really, I don't know that it's really formed a price channel here just yet. I'd have to spend some time to take a look at the different closes and opens out there. But, you've got you should have decent support out here at $22.63. So maybe that's the area where you would take a look at putting the stop and selling if that area gets taken out.
That's very good. Would you have time to take a look at BX, at the Blackstone Group?
Yeah, absolutely. And so what's the time frame that you're looking at Blackstone for? Are you in the trade, looking to get in?
Yes, I've been in it for some time. I got in it at around $14.
Okay, so let's take a look at the Blackstone Group. BX is the ticker symbol out here. Right now, it is at a price of $22.59. It's pulling back into an area where it recently broke out a little window, a little gap up, and that gap up here you're in about what price?
$14.50, I think it is.
Okay, good. Okay, so you've got a nice profit in there. So right now what it's doing, it's pulling back into the last time that it had a sign of strength, which was July 18th, that little window, that little gap up here. Now, it's a strong area of support, or should be a strong area of support, and the reason is on the daily chart, if you go back just a couple of days, Ken, and you take a look at the July 16th candle, that's actually a bearish engulfing candle. So that says that the top of that should have been resistance, which is 22.48. Old resistance should become new support. So 22.48 is an area where this should hold as support. It's gotten down today to as low as 22.55. It's coming into that sign of strength that had 12 million shares. It came in there yesterday with 4 million shares so far today, 1 million shares. It's not enough to bust it down. In fact, may pull back all the way to the last breakout on July 17th. Do you ever add to some of your positions?
I haven't so far, no.
Okay, so in this one here, I'm not saying to add here just yet, but it may give you an opportunity if you were interested in adding right around the low of July 17th, right around 21.82 out there as the gap gets closed, if it comes back with lighter volume. And ideally, your benchmark volume on this is going to be that 12 million thrust on July 18th. But, boy, if it can come back and test it on less than 3.3 million shares, that would be on the daily chart, what we're just currently looking at, would be the nice setup there. So that's on the daily. Now let's go this thing went from its IPO. This looked like, the IPO folks came out June of 2007 out at a high of $38, went from $38 all the way down to about $3 or so, $3.55 back in February of 2009. So it's making a nice climb back up to the top. But let's take a look at this on a weekly chart because you're in at the $14 mark. And so on the weekly chart, let's see what this says. It has a B point, a swing point, Ken, from April 29th, 2011. And that swing point had 20 million shares. And as it got above that swing point, it did it with 34 million shares. So Blackstone Group right now on the weekly chart has a confirmed A to B equals CD up to 2660 out there. Now, where you might get concerned, and so that's a pretty nice setup. That you've got here. So the pullback, on the daily we've seen has been on lighter volume, and so that's looking pretty good for you. Let me put this on a monthly chart out here. Now, of course, what you want to do is you want to make sure that you are also protecting, your profits in on this equity here. And the reason being is because you've got this high volume bar here that came in August of 2011. So 1705, if this thing were to ever fall out of bed, 1705 to 1150 could be a target where it would go back into. So do you, again, it's a longer term play for you?
Yeah, it is. I got to stop in at $20.
At $20, okay. So at $20 would take you all the way back to the June 24th swing point. And the volume down there, it's got decent volume, 9.2 million shares. But the good news on this is that since that time frame, this thing had a nice breakout with higher volume on 12 million shares. So I would say if it closes below 21.95, Ken, that your next area of support on this is going to be 21.21. And if that area gets broken, it'll probably get down to 19.15 to 20.24. So that's how you can kind of gauge this thing should it continue to pull back.
All right, Steve. I thank you so much for the info, and you have a great day.
I will. Thanks so much for calling, and good luck with your trading out there.
Thank you.
You bet. Let's see, folks. Let's go take a look at some of the sectors inside the S&P 500. And let's start it off by taking a look at the energy sector, the XLE right now. The energy sector here has been pulling back, tested its May 22nd swing point on substantially lighter volume. It had 19.8 million shares, and it was tested on 6 million shares, so about 30% of the volume out there. And then it pulled back with some increasing volume, 9.3 million shares. Yesterday, it did volume of 7.9, so it was decreasing just by a bit. Today, so far, up with 2.2 million shares, but that's going into 9.3 on the energy sector out here, which is, I think it maybe is now inside the S&P, is probably like the fifth or sixth sector within inside there. Now, what's key here on the energy sector is really taking a look at ExxonMobil. So let's go do that. Let's take a look at, got this listed here as one of our core stocks to be paying attention to. So XOM is the ticker symbol, and what's key about ExxonMobil is the mere fact that it broke out of a sideways, out of a consolidation, a one-year consolidation zone. So let's pull that up on the chart here right now. So ExxonMobil, as we take a look at ExxonMobil, take a look at this consolidation range here. The consolidation, taking you back, we're taking a look at the swing point from October 19th, had 15 million shares there. You then have a swing point here from May 22nd, 2013, 19 million shares there. It broke out with 10 million shares. So it broke out with light volume, but what it's done is it's come back with about the same volume here yesterday, 10 million shares. But that 10 million shares, now that it broke out above this consolidation, it's really going against 19 million and against 15 million. So we'll know today, or not today, tomorrow, we'll know over the course of the next couple of days whether this is a real breakout inside ExxonMobil. If it is a real breakout inside ExxonMobil, it sets up a move to $100. It's at 94.44. And that would put some energy into the XLE, into the energy sector out there. So we'll see how this continues to trade. But it has come back, and we've seen now basically 3 tests of that area, which is all that you need to see of that consolidation range. The first one here was on July 29th as it got down to 93.61 on 8 million shares. Yesterday was with 10 million shares, got down to 93.46, and now today it's gotten down to 93.54, and it has 2 million shares in there. So we'll see if it's going to be able to stay out of the consolidation range, and if it does, it's going to be a nice move up to $100 inside ExxonMobil. Of course, you got to take a look at the other equities in there as well. Inside the XLE, that's going to be Chevron. CVX is their ticker symbol. Let's go see what Chevron is doing here. Chevron had tested its swing point high. Whoops, didn't mean to do that. Let me pull that back up on the chart here. Chevron had tested its swing point high on lighter volume, just as ExxonMobil did. That's the May 28th area inside Chevron. That had 6.5 million shares, and that was tested with 4 million shares, 3.7 million shares, 4.5 million shares, 4.4 million shares. So this has failed to be able to get above that swing point. It's had nothing but rejections for the last, the week or so out there. You've also got Schlumberger, SLB is the ticker symbol. So let's go take a look at Schlumberger. It, too, has tested the swing point. Now, Schlumberger did have a nice little breakout here. Let's take a look at it. This was testing the the February 14th area. It's a daily chart that we are looking at, and that was a high of $82, 11 million shares. That area was taken out with wide price spread and 17 million shares, so it had the volume as it got over it. And now what happened a couple of days ago is Schlumberger pulled back into that sign of strength with lighter volume, 4.8 million shares, again going into that breakout session of 17 million shares. So inside Schlumberger, $80.89 is going to be a key level of support. It has only been tested once out there. So that's on some of those equities within the XLE. Let's go and take a look at a couple of the other sectors here. Let's see what is going on inside the technology sector, the XLK. See what we have going on there. The XLK here right now has closed the gap. It has closed the gap down from July 19th. That gap down was with 13 million shares. The top of that gap being the July 18th candle, 31.92. So it's the low of that session. Again, 4.2 million shares. And yesterday coming into it with 5 million shares. So coming into that area with volume today, it's tested that again, 1.1 million shares, but it is held as a resistance area. And that is inside the XLK. That's important because it is the largest weighting inside the S&P 500. And seeing a little bit of a breakout here and the largest weighting not contributing, one would have to say, something to think about. 877-927-6648. We'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's up 99, S&P is up 10, NASDAQ Composite is up 21. So let's recap where we are in the markets and what we can, what makes sense and what doesn't make sense. So let's start off with the VIX index right now. The VIX here yesterday tried to break above that little rising trend line here. Looked like it was going to do it, the little engine that could, but that couldn't yesterday. And that's a trend line coming off of March 14th's low, 1105, down to the low of 1226 on May 17th. And so a little bit of a trend line line. Got that hammer candle from July 18th that was broken out here. Yesterday got above it and went ahead and ducked right back below it. This morning here tried to get above that area again, but not a lot of movement in the VIX, trading out at 1345. So no real piece of information here from the VIX that we're going to pay attention to. Number two piece of information, we've got the New York Stock Exchange. It's up 50 points. It's up 0.5% right now, but it is on light breadth out there. 276 net advancing issues inside the New York Stock Exchange. In order for the bulls to take control of the market, what is needed today is net advancing issues of 1,055 out there. It's only at 277. The Dow's up 97. The New York Stock Exchange up 50 points. Kind of makes you say, something to think about out there. So if in fact you don't get 1055 today, says the bears actually still have control of the marketplace. So we've got that to take a look at. Let's go take a look at what's going on inside the currency pairs out here. Let's go see what we have going on inside the euro yen currency pair versus the dollar. So the euro yen here, so this is one reason why we're seeing some movement in the markets. You can see this has rejected. It's got down to the 0.382 retracement level, 129.75, and it's moving higher. So let's go take a look at what's going on the intraday chart inside this on the 30-minute chart for the euro yen. So right now it's moving towards a overbought status. It still has a little bit of room to run to the upside, but it certainly moved off of that oversold status that came in at 7 o'clock this morning out here. So where could this run to? Looks like the next swing point out here will take you back into about the 12:30 time frame on July 30th, right around 130.51. So you do have a confirmation here on the intraday chart with regard to what it's doing. But if we go take a look at the chart that is not confirming the move here, it is this one, and this is at the top of the chart here. You take a look at the S&P 500. You can see this thing here is trying to make a new high, whereas the euro Japanese yen has been on a decline here. And what I've got, this is one of my divergence charts here. It's included in my newsletter service each day out there, a number of divergence charts to pay attention to whether or not price is real. These are leading indicators, and typically the currency pairs, price will resolve itself in the direction of the currency pair. And at this stage, the euro yen, this is the daily chart. So this has a better idea of what the market is suggesting that it actually wants to do out here. And right now, it has not suggested at all that the direction in the market is to the upside. So we've got divergence inside the euro yen out there. The VIX hasn't done a whole lot. Should be pulling back more. New York Stock Exchange is not confirming the move out here. So it seems to be few stocks that are participating in that move. And so those are the parameters that we need to pay attention to today to determine whether or not the Bears have fumbled the ball. But not fumbling the ball here at TFNN. I'm going to hand it off to Basil Chapman. He'll be up next. Then we've got Larry Pesavento. After Basil, after Larry, we go out to Daryl Martin, then to David White, and then it's the Tom O'Brien Show from 4 to 6, folks. So have a great Wednesday, and remember this. The way you do anything is the way you do everything. Become a pioneer of your future. Do not be a prisoner of your past. Have a great day, folks. I look forward to seeing you in the morning. Take care now.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.